Hey, good evening, everyone, and welcome to this edition of the Hines Agency podcast, More Than Just Insurance. Today, I am so pleased to have Jahaan Wiley here with me to discuss commercial banking. The reason we wanted to have this podcast today and bring this to you because a lot of people don't understand commercial banking. There's a lot of entrepreneurs out there that look for loans sometimes in order to fuel our business. So today, I'm bringing Jahaan on here to talk about his experience and give you the bird's eye view of what he goes through and what you will have to expect if you're looking for any type of loans in the commercial lending arena. Without further ado, we'll get started here and introduce our guest, Jahaan Wiley. He's an industry professional in commercial banking, and we'll go into Jahaan's journey. So, Jahaan, welcome to the podcast, and glad to have you this evening. How are you doing today?
I'm doing well. Thankful for another day. Thankful for allowing me to join your platform. Excites me. So hopefully provide some impact. Thank you. Kind of getting into my background, I've kind of started early in financial services. I was a teller when I was in college in my undergrad studying finance. I also helped at the financial aid office at school for work study. So those two experiences kind of got me started in financial services. I learned pretty quickly that I had a passion and an ability to impact clients. That included an internship actually at the incubator space at Toledo, where I co-founded the first entrepreneurship club on campus. Really cool experience. I got to work with a lot of technology startups in their early stage growth, helping them find funding and resources to kind of get them started. So that developed a passion for business development. Really curious, how each business started, where they are now, and where they want to go. So I originate commercial loans, kind of keep it at that high level for now.
Yeah, that kind of segues into our next question here, where we're going to, what's the typical day for you as a commercial banker when you come into work? What are the tasks that you attack up front?
Yeah, that's a really good question. I mean, it varies. We have portfolio management. So essentially just taking care of my existing clients, making sure that they're taken care of with any current requests that they may have, ensuring that they're performing well, then prospecting. So looking to grow and add more clients because I feel like I'm the best in the world. So I want to help everyone I can. So part of that is telling that story, saying, hey, I can help. What I find a lot of times, a lot of clients don't even know what they don't know. They may not know they need me until give me 15 minutes and then I can potentially change your mind. So part of that is telling that story. And then everything else is kind of falls under that and supports that. So you have continuing education. So continuing to stay sharp in the game, knowing what trends are happening, training compliance, making sure that we're doing everything we're supposed to, make sure I's dotted, T's crossed. So that's pretty much it.
What I did catch from what you mentioned, you don't know what you don't know. Some of the things that you brought out here is the reason why we're here today. We want our listeners to know what they don't know. We look at subject like commercial banking or banking, get intimidated. I'm going to move on and topic here with you, these 5 C's, and let's kind of dive into that one.
The 5 C's. And that's a really good point, Jay. I think the more you understand what we're looking at, the more I think it will be helpful for you to say, okay, this isn't that scary. Because I was an analyst, right? I did commercial underwriting, but I remember the best advice I got from a credit officer. Does it make sense? It's like, I don't want to oversimplify it, but like we can use so many ratios, we can look at things so many ways, but at the end of the day, sometimes numbers can be used to explain anything. Numbers are numbers. What does it mean? And this is where everybody can have this conversation. To do that is the 5 C's of credit. So it kind of breaks it down into 5 areas of credit. Starting with character. And I think for a community bank or any bank, character is really important. Credit score, do you pay people back? Capacity is the ability to pay back. And this is where for business and commercial lending, it can kind of get nuanced in that a lot of it has to do with the formulas and equations and stuff. But again, do you have the ability to pay the loan back? And then capital, do you have the capital to put down on a loan? Do you have capital in reserve? So if something doesn't go as planned, you have the ability to withstand the storm. So we will look at stuff like that. Collateral, assets of value you have to put with the loan. It minimizes the bank risk. And then conditions. conditions. And this is, again, when it comes to business, it can kind of get specialized. Conditions can be very creative, but at a large, these are the five kind of categories that we will look at when it comes to credit.
Basically, going back to condition. So when you look at character, capacity, capital, collateral, all that kind of goes into what the conditions may come out to be.
Correct. That's well said.
Because once all that's examined, condition is set, where you might have to meet that based on some of the other areas that you may have a question mark or two. But I think, just for our listeners, a lot of times people go in with emotions, but they have to understand that these things are not looked at emotionally. These are things that are looked at very black and white. There's some prep to be done here, I would say.
And to your point, Jay, you bring up a good point. I'm like, wait a minute. I mean, you could do my job over here, right? Because that's a great point in that don't be afraid to take a swing. I don't run into a situation where all of these are met at 100%. There's a weakness in every deal that I've looked at from a credit perspective. And again, it goes back to conditions. That's where, as a credit underwriter, as a analyst, and why there's specialized roles, is to draw up conditions to mitigate the risks that are present in each deal. And that's why different banks exist and financial institutions, because so each bank has kind of their own non-negotiables, I guess you can say, or things that they are less willing to have flexibility with. You won't know that until you go and start having these conversations and being honest. That's the biggest thing, is be honest, because it's my job to, take that honesty, take your story and tell it to whoever's looking at the credit to say, okay, I understand this, but here's why. Here's how we can mitigate that in order to get this deal done. So be honest, don't be afraid, have the conversation and learn from it. Understand why it's important and how you can improve it.
I would say don't be afraid to understand what conditions that you do need to meet. Now, I know we don't want to do this in wasting your time. You're going to help them get this fine-tuned and focused. And maybe they think they're all together. Maybe there may be some things you identified that they're not. That should not deter them from coming and see you.
Absolutely. How we build real relationships. I'm jumping ahead here, but I'm in it to build real relationships, real long-term relationships. With that being said, I have the time in my calendar to educate. Let's meet. Let's talk. Yeah, absolutely. Okay, it's not a waste of time. That's what I'm saying. It's not a waste of time.
And so now what we're going to do, we're going to move forward here. We're going to talk about how does commercial lending differ from consumer lending?
Yeah, that's a really good question. I get this a lot. The way I try to break it down is consumer lending tends to be more straightforward, and commercial tend to be more nuanced and detail oriented. Consumer lending target people and their needs, their expenses and usage. So mortgage, auto loan, student debt, personal loan. Think about a personal loan where you apply for a personal loan. In some cases, you don't even have to tell the bank what you're using the money. Commercial is completely different in that it's for businesses and their operational needs. And businesses and operational needs can change and vary from one business to the other. So this is where it gets more specialized and nuanced, because and the purpose of the loan matters to the bank. And the reason it matters is because typically the loan sizes are a larger. If I'm going to give you $1 million plus, you want to know what you're using it. Be prepared to explain that in detail. Now, I can't tell you what to spend it on technically from a regulation standpoint, but that answer is a part of the loan request. So that's the biggest difference. Is commercial is a little more nuanced, and the purpose is for supporting business operations, whereas consumer is typically more so for your personal needs.
What we got to get out of the mentality sometimes is that we want to start a business, give me the money. And I know it's laughable from our standpoint, because we know there's a thing called underwriting that's not going to look at it that way. The bank has got to protect the interest money. At the end of the day, this is not asking your buddy, let me hold 20 that quick.
Right.
Well, that can mean anything. You've got to be willing to, hey, look, I need X, for X, buy X.
And more importantly, and to add on to that, this is going to help my business by Y. I think that's a big piece of it. What is this funding going to do for your business? Is it going to help it with working capital? Essentially, working capital is short-term financing to help you keep the lights on and keep things rolling. Whether it's inventory, is it for that? To keep it focused on this question, I think, again, consumers is more straightforward, and commercial is a little more nuanced, and then that leads to business consideration. What businesses should consider, what are you using the money for and why? And it's only going to help you and your business succeed. because as we just come out of a really, really expensive capital environment, to borrow money isn't cheap. You should know as a business owner what you're using it for and why, because I had many conversations where lending wasn't a good option. I'm that banker. No, I don't think it makes sense for you to get a loan right from the cost benefit analysis, what you're using it for, and what maybe the cash that you have sitting on a sideline that you're waiting to invest, maybe you use that. And these are the real conversations that I have with clients. And obtaining a loan are beneficial to operating a successful business. That's what
I think what happened during COVID and coming out of COVID, there was a lot of free money, but the PPP ended up being free money, so to speak, where a lower cost to borrow it.
Yeah, fair.
I want to touch on that because maybe I know I'm not necessarily deep in it as you are, but what I want to remind the audience is that don't expect that now in this environment. When we start talking about the feds and the doves and the hawks, the doves being the ones that are softening lending versus the hawks that harden lending. Right now we're in the hawk phase where it's going to cost you at this point. So I know a lot of us got spoiled during that time frame of the money being there and available at a lower cost. But today you mentioned that's really not the case.
To your point, cost has come down significantly since COVID and where we are, Fed's cutting the rate, and it's kind of our outlook is clear with the election being done, and to say that it's significantly lower, but cost of capital has dropped some. All costs can make sense if it makes sense. And it goes back to understanding what the purpose of the loan is. If you're gridlocked, your growth is blocked by physical square footage in a building or outreach to a market segment that you have been unable to penetrate, capital that's standing in front of you from doing that cost of the loan is probably going to be a minimal impact on the bottom line if you've done the math right. And this is, again, why the purpose of the loan is one of the most important things to consider when you're going to look at a loan. What is this going to do for my company?
But that's a great segue into the utilization of the commercial loan.
Yeah, operating cycle. The way I think of it, simple terms, essentially, the moment you take cash out of your pocket as an owner or out of the business and you put it elsewhere to start a process, the total operating cycles go from the start when you take money out to all the way until you receive money back in. In theory, clothing retailer, they may buy inventory for $10,000. That inventory may take a week for them to get there. So $10,000 goes out of their pocket day one. They don't get the clothes until a week later. Any retailers that's watching, if it's 3 days, just bear with me. So that inventory may sit for 2 weeks before it sells. So it takes about 2 weeks to sell. Again, let's say if they sell 15,000. Most business transactions, and maybe it's not retail, again, bear with me. Most retailers, there is credit terms, meaning if I buy from you, I have 30 days to pay you. Retail may be more of an on-spot transaction where it's more cash. Let's say half of it was credit transaction. 15,000 in sales, 7,500 was credit, and 7,500 was cash. Let's say that's a month of sales. Cash collections on day 30 is 7,500. Then you got another 7,500 that's due in another 30 days. So your cash collection or your operating cycle is 1 to 30 to 1 to 60 days. There's cash that you've put out of your pocket that you're not going to get until 60 days. Now, this is on the short end. There's manufacturers that build stuff that buy raw materials like resin and plastic. That process can go on for 66 months to a year, depending on how specialized that product is. The importance of that is cash flow. In that process, there are bills that are due, there are payroll that's due, and how are you managing that? A lot of people manage it internally themselves from just saving cash, and that's great. Sometimes this is where banks come into play, and it goes back to the purpose of lending to support an operating cycle. And what's unique and fascinating about what I do is that operating cycle varies from business to business. So I get to get in there and say, tell me about your cash flow. Tell me about your accounts payable, accounts receivable. Let me understand how things are happening here. What are you making? Where are you selling? How are you selling it? What are the terms? Is there any shortfalls that I can help? And it's fun. I think I covered most of everything for, I guess, the first 2 points there. You have anything to add there, Jay? Or
I just wanted to break it down on the personal side, 30-day cycle. Within that month, I got bills to pay. I don't know what's going to happen within that month. I just know, and I've got to function within that 30 days. It's just the same as you managing your personal finances, the same you had to work the business. You got to know when your money's coming in and how you're going to have capital to use to keep your business flowing the same as you do your household.
Yeah, no, that's well said. And I think knowing it and then also being able to articulate it to me as the banker, because you can have your own scratch sheet system going on. But again, we're talking about what the process looks like for a commercial loan. And that's one of the questions that I'm going to ask is, what does your cash flow look like? Do you have a 13-week cash flow statement? Now, not all situations require that, and I don't want to scare anyone, but having some thought of where because again, another credit officer told me this. He said, businesses don't go out of business because they lack sales or business when they are unable to pay their bills. It's cash flow. It's not net profit. I don't want to get too detailed, but basically net profit is one thing, but understanding how cash flow works is very important.
You want to talk about the capital stacks in
Yes.
the last two there?
Yes, broken in half because the first two is more so like short-term lending needs. So understanding operating cycle, how we can support that. Most of the time, operating cycle is within a year, 12 months. The second point here is strategic growth, and that's largely dependent upon your capital stack. And what that means is basically how you have funded your balance sheet or your company. So that could be equity from owners, senior debt, mezzanine debt. But I think what is important is to understand operating cycle, purpose of the loan, how financing entity can help with that. And then from a long-term perspective, what's the purpose of the request? Strategic growth. Where is your company going? And then how are you going to fund that destination? Equipment financing. Maybe you need a particular equipment to do that. Are you going to fund that out of pocket or are you going to fund that with a finance? Let me give you another example. Commercial real estate. So buying and getting into a bit larger space. How are you financing it? And so those loans typically are more than a year. Just kind of understanding the difference between short-term lending, long-term lending, and both are purpose driven, and understanding that it will help you have the conversation with any lender.
You got the operating cycle down, you're supporting your operations, everything's going pretty good. And maybe you look at growing and scaling your business. Like you were saying, you want to leverage your capital for your growth. If you borrow money, these maybe have money to pay it back. Some companies, they prefer to leverage before they use their own money, if you can get to that point.
That's well said. Thank you for adding that. That's very helpful, how they're more so connected than what I articulated. That's really good. Thank you.
I'm going to go forward here, the application process.
Clean records. I think I'm going to skip here a little bit. Key partnerships. Let's start with key partnership because this is so important to accelerating your learning curve. You're not an expert in commercial lending. I am. Jay, if I have any questions around insurance, guess who I'm calling? I've called Jay before. Jay, hey man, this is what I'm thinking. This is what's going on. What are your thoughts? We've been in meetings before and Jay is the expert when it comes to insurance. So Jay will speak up and say, hey, I know, have you guys heard this? This is where it's like industry, going back to like what I do daily. I read the news. I read industry information so I can be in the room and like Jay is and say, hey, have you heard the recent changes and et cetera? This is, I know it's wordy, but here is basically what it means to you. And this is how I think we can protect your assets or whoever assets. If you guys have any questions, and there's been times where I didn't call Jay and say, hey man, tell me more about that. So having people in various industries is so important. Joining your young professionals, your Rotary, church, whatever it is. But these people, and like myself and Jay, because we wouldn't be spending this time if we wasn't passionate about this space. We enjoy talking about it. This is not work for me. I mean, I enjoy doing that. So most people who you run into are industry professionals love to talk about this. Jay, you got anything to add to that? I know, we are big on partnerships, but I wanted to just start there because I think it really, kind of flows into all the other areas.
I think what we have to understand here is that you don't know what you don't know, right? We're going, we kind of had that theme from the start. So let's go this route. My personal story about when I wanted to start my insurance business, I wanted a place downtown. Well, I was in the Rotary. I talked to a couple of Rotarians. They said, hey, so-and-so has building to rent downtown. This is who you need to talk to. These are the people that Jahaan and I get with to understand what we need to do in order to get our affairs in order. As an insurance agent in the application process, when you do go to Jahaan with your records, he's going to know that you're insured.
Yeah.
So you just can't have a business without being insured. You got to make sure that it's in place as well. Just one piece of the pie, just going there, talk about, oh yeah, I want to do this. But hey, do I have the whole pie? Key partnership is bringing that pie together because they're going to help you with the financial record. They can help you with your strategic projection. They can help you you help yourself. All these things kind of coalesce for you if you allow them to.
Insurance is extremely important when it comes to protecting assets. And if you're not having something like that protected, it's a very risky situation to be in. So there's times where we even set requirements for what that insurance looks like. It's not driven by Jay. It's not driven by you, the client. It's driven by our risk parameters that's required. And your partners are very important.
And so Jahaan and I look at it like this. If it don't make sense, we're not going to ask you to do it. Even if that's saying taking money out of our pockets.
Absolutely.
Everything else will fall into place. Yeah, but if it doesn't make sense, I'm not going to steer you to it. That's the value we want to bring to our client.
Absolutely. And again, it goes back to long-term relationships. I have, senior bankers that they've built so many relationships that they're not looking for new relationships so much. Can you imagine being in a position where all your business is coming from referrals? And if you're smart in the financial industry, integrity, doing the right thing will get you so much further than quick transaction. Years down the road, that's how you get repeat business. You do the right thing, people are going to come back, and then they're also going to tell other people about you. And then now you have just a fountain of people who want to do business with you.
I'm going to move up to talking about the SBA 554.
Yes.
What do your clients need to know about the application process for the 554?
So what's important about this loan is you do not have to be an expert. There are going to be questions that are going to come up when you Google this for the first time, when you look into it, and don't allow it to discourage you. This is what I get paid for. I wanted to start by saying, use me as a resource. The SBA 504 is probably the second most popular SBA loan to the 7A. The SBA 504 is collateral based, meaning that it's typically for purchase of commercial real estate or large equipment. When we talked about the kind of two segments of short-term support versus the long-term strategic growth, this is a product that's more designed for the strategic growth piece. The reason why that's important is because of the benefits of the program. Low down payment. So when we talked about the 5 C's, the capital piece, it takes less capital to get into this loan than a regular loan. And I want to add that typically when commercial real estate, we typically do a 5-1 arm. And what that is it's fixed for 5 years. And then after the 5 years, the rate adjusts. Think about that as a business. When you are planning for the future and you have to think about what the rate will be on your commercial mortgage in 5 years. That's not meant to scare, but it is meant to just think about the reality of commercial real estate. And that conversation is far more easy than what it may seem. But I bring that up because when you have a 25-year fixed rate, that helps out with your strategic planning in the future. And especially when that fixed rate is below market. So there's a ton of value in this program, but I'm a banker who does a really good job of making sure that you have no surprises on what this process looks like if you would be interested, and we can talk more in detail about it. But again, the biggest piece is that it's a low interest and it is a lower down payment to get into it. I'm sorry, I didn't say this, is it has to be owner occupied. The business operate within 51%. And I think there's a lease requirement too, where the income has to be at least 51% of it as well. This is a program that is extremely beneficial, and we do a really good job of processing these.
So I guess my question I had for you was, is this loan refinanceable?
Yes.
So if it's 25 years, so you can refinance it?
Yeah, absolutely. Always. Think about the environment we've been in where interest rates were rising. So really it wouldn't have made sense to refinance. But I think what you're thinking about is if rates were to decrease, would you be able to refinance it with another 504? And the answer is yes. I did confirm that. Yes.
Well, I guess my question would be, even if I 5-1 arm, remember now I'm at an adjustable interest rate. in year 6. I don't know what that's going to be.
You would have some idea because in your loan documents or your note, it would say what benchmark that rate will be after year 5. So like, let's say we're approaching year 5 and you know your rate's about to adjust. The language in the note will say what it's going to adjust to. And you can go out and look and say, okay, all right, this is the rate. So you would know the rate. Like, it wouldn't be a surprise what that rate would be. But now, obviously, year 2, you wouldn't know what that rate would be in year 6, though. We're talking about in year 5. Did I answer your question?
Yeah, because I'm kind of gearing this toward the audience because let's say people that do know about how these arms work, they'll need to know that in case they do want to refinance. If the rates are lower or they can get a lower rate versus the arm, then that may be something they want to look into.
Yeah. And again, it goes back to purpose and understanding the culture of a business is very important because some people are like, listen, I want a fixed rate. I don't care. I do care what the rate is, but that adjustable stuff, that just isn't something I'm interested in.
Right. And all I'm saying is look, everything is situational, case by case. And once you get there, you'll know what you need to do based on the circumstances. If you need to refinance, you can. If not, don't. The interest rates are low, stay with it. Just cross that bridge when you get to it. All right, we're going to move on. We'll go to the benefits and challenges of owning commercial real estate.
Yeah. And so commercial real estate and real estate in general is a great way to help you keep a lot of the money that you earn. I'm not a CPA. I'm not an accountant. I'm not making any promises. But what I am saying is there are tax code that's favorable for commercial real estate owners. So consult with a CPA, your right? Going back to your partners, make sure you have a great partner set up so you can understand that. Cash flow. This works kind of for leasing as well. But one thing about owning in a lot of cases is your cost is level. You can control it more. Where think about a lease where, you may sign a 5-year lease, but after that 5-year lease, you're really at the mercy of the owner as far as the landlord. So it could go up, a lot, or the conditions could change. When you own, you control that. And then also gives you more flexibility to earn cash. So not only do you have, let's say if you're a barber, right? Or a salon, a hairstylist, you own the building that you operate out of. So one, your fixed payment is level. Then you're able to rent out booth space. There's benefits for cash flow from from different opportunities when you own. And then equity. So like, again, going back to that barbershop opportunity, I worked hard for 10 years. I don't know. I think I might want to do something different. Okay. How are we going to do that? Commercial real estate building appreciates in value. Shoot, I got $1.5 million in equity. Okay. Maybe I sell that and start to use that to do it. And then there's a really cool thing called sell lease back. So in that situation, as a barber, you can say, I don't want to be the owner anymore. I want to give up my equity position. Give me my $1.5 million, but I don't want to leave this space. Hey, new owner. So real estate agent, I need you to find a buyer that is okay with me staying. I'm instead of paying the bank or the finance company, I'm going to pay the new owner a lease. So I'm going to get $1.5 million back to me for selling the property. I'm going to stay in the building. I'm going to continue to make money off of my booths. Maybe I won't make money off of the billboard, but who cares? I got $1.5 million. I'm going to pay you a lease for 5 to 10 years, and we can have that conversation when it comes. Maybe I don't want to do anything with barbering anymore after I start this new venture and I move to Florida or whatever I want to do. But that equity build is happening year after year after year, and it's passive, it's quiet, but it can be massive. So there's value in that. Whereas that 10 years passes when you're leasing, you don't get any equity in the building. You may be able to sell your business, your clientele list, but you're not taking advantage of that equity build.
At the end of the day, the good thing is, like you say, you got a consistent, if it's $1,500 a month for the next 30 years, depending on how long that loan is, 25, 30 years, whatever. So you're going to pay $1,500. So your cash flow is there, you know what you're going to pay all day, every day for years. Whereas the difference is if you do rent, what happens with your business, you end up getting a lease that may go up, and then guess what you do? You move. Now you move locations where you've established yourself at one location. Now you got to reestablish yourself at another location. So really did that to lower your overhead, which makes sense. And a lot of small businesses do that. And I'm just saying that is kind of the fallout of leasing, because what ends up happening once your rent goes up, you end up moving.
Yeah, no, that's a good point. I do want to add a caveat because even though you own, your payment can change. As you know, Jay, insurance could change. So therefore, when you talk about mortgage, you're talking about just P&I. Or go back to the SBA 504. You have the ability to fix it in for 25 years, so that won't change for the life of the loan. So just want to caveat that it could change, but you just still have more control.
So let's go ahead up to the challenges and we'll go ahead and start wrapping it up.
Yeah. So, market volatility, I mean, COVID, right? From a business perspective, there were winners and losers as far as there were some opportunities that were created from COVID, and then there was some hard times that was created from COVID. Prime example of challenges when owning. So there are challenges when it comes to owning. So that's one of them. And then management challenges. Unlike leasing, when something goes wrong, where you can call the landlord to get the AC fixed. When you own, you're making that call. But as I always say, most things can be mitigated. Market volatility, you want to make sure you have savings, weather those storms. Despite the challenges, I'm a firm believer in there's extreme upside to owning commercial and residential real estate.
All right. Well, hey, man, appreciate that. Going to move over some final advice and some of your takeaways from your presentation today.
Yeah, understanding the bank's perspective. Listen, think about what we're thinking about, and that will help you understand that one, it's not personal, it's business. And let's talk business. Let's talk logic. Let's talk numbers. Let's talk what makes sense. And that will help give you the confidence to have this conversation and also take you a lot further because you're going to be more prepared to receive some of the information. So we take in money for deposits and we lend out at a rate higher than what we pay on deposits. And that's a net interest spread. And that's in addition to service fees, how banks make money. And the more risky our loan portfolio is, the more reserves we have to hold back and cannot lend out. Just understanding how a bank's perspective is very important to understanding some of the reasons and some of the policies, some of the yeses and nos is based on understanding that perspective. Circling back to the 5 C's of credit, it's really a global perspective into how we think. 3, aligning loan purpose with products, making sure that the story that you're telling for the purpose of the loan makes sense. And then lastly, having a great advisory board. Again, it's kind of like 4 is like all 1, 2, and 3, because you can get help with all 3 of them with the right part. Those partners are built with not being afraid to just go and just ask questions and start the process without concern of, yes or no. I'm an industry professional. I've experienced no's and credit requests even the last 5 years. The most important piece is to understand why. That's the biggest thing. Anytime you get a no, I don't care what it's for, and notate it. If it doesn't make sense, I want to understand so I can better position myself next time that I decide to, extend myself for credit. So any additional information would be really helpful for me to understand. And most people are willing to say, here's what we see and take note and think about it. Does it make sense? And then go on to try to, navigate and improve whatever area that is before the next time you apply. The next bank you talk to, you say, hey, listen, here's what my situation looks like. Will that be a problem for you? Oh, yeah, it is. That's still a problem. Okay, well, great. It's nice meeting you. Moving on. Same thing. Oh, that's not a problem for us. Okay, great. Yeah, let's move forward. It saves a lot of the no's once you understand the why behind the first no. So, right. Yeah, no, that's it.
Hey, we appreciate Jahaan's time. We appreciate all of the people that listen to us. Look, go back. If it's something that you missed, it's something that you didn't understand, go back and rewind this. There's things that maybe we didn't cover, or put that in the comment section and let us know, did you like this or not? There's things that tie into this that people need to know about and help them get where they want to go.
Yeah, I was just thinking of one. So I think the biggest thing is what you were just saying. You don't have to be an expert in everything. You just have to know an expert in every area. I find myself doing this at times where it's like, I have to know most of what I'm getting into before I even get into it. But it's like, no, find someone that you trust and start asking questions. So please use me as a resource. I appreciate the opportunity. Reach out with any questions, make myself available. This is my stuff. I love it. And hopefully what we talked about today is helpful and impactful, and use me as a resource. Thank you.
Tell us how to contact you real quick. I know we got it on the screen.
Oh, yeah. So yeah, LinkedIn, that's where I'm probably most active. Shoot me an email, and then my phone number is listed there as well. You feel free to reach out there as well.
Thank you so much. Look, we're real people doing real things out there. We want to get out the information. That's the most important thing, is to do it. We're here, man. We're regular folk. We're out and about. We're in the community. We want to help those that need the help. If you're looking for commercial lending, I got you. If you're looking for insurance, Jahaan's got you. This concludes our podcast. Thank you very much for listening. Thank you, guys. Appreciate it.